I can't say enough, jobs, jobs, jobs. I mean, that is the critical factor driving many, many governments.
With rising demand for critical minerals colliding with a renewed push for sovereignty, local value capture, and development impact, the real question is whether Africa can strike a balance between aligning resource nationalism with long-term competitiveness without deterring the capital needed to develop complex multi-decade projects. Today, we explore whether Africa can balance resource nationalism with investment certainty. We'll have that conversation with Namrata Thapar. Namrata, thank you so much for your time. We've been talking about critical minerals, and Africa sits at the center of that particular discussion. What makes the continent positioned uniquely, yet at the same time having to deal with the challenges around balancing that sovereignty, but then also including competitiveness into that conversation?
So Africa has a real advantage in the minerals and metals development. If you look at Africa today, it's already a big connector to the global supply chain for commodities. It has the minerals. It has 30% of the minerals. And going forward in this supply chain, I think Africa actually is even more important because there is the youth that is, I believe, 500 million youth that need to come in to the job market by 2040. So of course, Africa has to think about jobs. And I think the mineral sector does present that opportunity. So in terms of what they can do, they have to also look at the challenges that the continent faces. And some of these challenges are real, and these challenges are skilled labor. So yes, jobs are needed. The young generation wants jobs, but also we need skilled labor in order to develop the metals value chain, if I can call it that. Second is the infrastructure, and in many cases, the foundational infrastructure that is needed. Third, in my view, is really stable policies and reforms that can allow this investment to come in. And here is where, as part of the World Bank Group, we are trying to support the continent in terms of really supporting on reforms on policies, working with governments to say, okay, what is their national strategies, and how can we then help support as well as implement those national strategies, being a conduit between mineral development to the whole value chain. Similarly, infrastructure. So many countries don't have energy or have energy but not enough to support the value addition in country. So supporting that as well by bringing investments but bringing partners as well. And thirdly, for us, what is critical is the private capital mobilization. So as IFC and the private sector arm of the World Bank Group, we work with partners to be able to find solutions on whether it's on debt products, equity products, and bringing more. So for every dollar IFC could bring in, we would like to bring 10 and more.
There's so much to unpack there in that response. Let's talk about the challenges that you highlighted. Do you find that the list of challenges, is it getting longer, or are we making a dent in finding those solutions to the challenges that you've highlighted?
I do think we are making a dent. It's not easy, especially on the infrastructure challenge. So let's take that and unpack that a little bit. Infrastructure is complex. Infrastructure needs major capital, and you need investors. It's also long lead times for infrastructure to come through. So where there is tension between mining happening today versus infrastructure not being there and taking another 10 years to bring that infrastructure. So that's where there can be tensions. But the dent we are making, and I'll give you an example of how we are supporting on the energy side first, is last year in 2025, early 2025, in partnership with the AFDB, we created the initiative called M300. M300 is a platform that brings partners together, aligns with the government's own internal strategies, and the outcome is to provide, the success factor is to provide 300 million Africans with energy. And already in this 1 year, we've been able to provide 30 million. So clearly, there is a dent. On the infrastructure transport corridors, that's where we again feel that if government to government in the continent start talking and aligning their national strategies and the ability to construct rail between 2-3 countries, and then getting investors, because then you're making things competitive. And you are also allowing investors to see that countries are coming together to be able to find solutions. So we're working on the Lobito corridor, where our guarantees team through the MIGA are looking to provide risk guarantees to the private sector so that they can then bring in long-term capital to build this infrastructure. That takes a long time to build, but also is dependent on multiple countries and multiple corridors.
Do you find that governments are asking fundamentally different questions when it comes to critical minerals right now versus what they were asking years ago, especially as it relates to value creation, especially when it comes to ownership and competitiveness? Are the questions different now that they understand what we've been through as a continent?
Absolutely. And I think there are two different elements. One is jobs, and I can't say enough. Jobs, jobs, jobs. I mean, that is the critical factor driving many, many governments. And that in turn links to the skilled piece that I was talking about. So how can you build skill? And that links to your value beneficiation in country, value addition in country. And then that links to what we say is shared prosperity. So if you look at shared prosperity, it means that minerals are responsible for already for, in many countries, between 6% of GDP and 20% of exports. But governments want to create this pie, a bigger pie, instead of divvying up the pie, but a bigger pie that can be divvied up between government, potential investors, and others, including communities and their own hosts. So those are the two areas, I think, where the governments are really revamping their needs, talking to investors with that as a platform, and we as a World Bank group in our revamp strategy, as I mentioned earlier, are clearly focused on jobs, and not just in the mineral sector, but all sectors, and the value addition. We also want to see value created in the continent beyond just extraction. And this is what links the global supply chains, right, to the continent. So if you can create more value through addition, value beneficiation in country, you're building skills, you're building human development indicators, you're building jobs. And mining in minerals and metals sits as a conduit to so many sectors. So if you want to do mineral development and the whole value chain, you need energy. So you generate energy jobs or jobs in the electric sector, if you transport sector. So I really do think if you can get jobs and value addition in these in your discussions with investors, the continent is going to benefit.
I'm glad you brought up discussions with investors. Many of the attendees here at the Mining Indaba are familiar with the IFC's work. They're familiar with how you invest across different aspects. What are investors most sensitive to in the conversations that you're having with your counterparts, with other investors who want to participate in dealing with some of these issues around infrastructure, et cetera? What are they most sensitive to?
So, I think let's start with policies and reform first. And I'm keeping this theme because it touches on a lot of it. So investors want stability. Mineral and metals value chain has become even more and more complex. It's capital intensive. So if you want value addition in country, you're looking at really competing with countries that already have very established processing, refining, smelting capacity. So how do investors come in and try to see if they can create a competitive business? So you really want government to investor partnerships where investors can see a long-term horizon to be able to deliver to their own shareholders the risk and reward that they are promising, but then have that stability. So that's on the policy and reform side. I think clearly one of the key things as we look at large projects, work with investors, one of the key things that they are very worried about is infrastructure. Many of the mining and metals producers are not infrastructure generators of electricity or managing rail, and so they really question, okay, how can we ensure that the government really supports on the infrastructure side? Then comes the, I would say, in terms of how do you structure these contractual commitments between the investor and the government. And here, many a times, investors want to know who is going to be their partner at what level of equity participation. Many a times in the mining cadastre, you have 7%, 10% free carry, but the rest needs to be brought in. And if it's not brought in, how can the investors make sure that they can then find that equity in the market? So I think the equity component is also becoming quite critical in their risk-reward selection. And especially if you look at downstream, midstream processing, these projects have very low margins. So if the margins are low and you don't have conformity on who's going to provide the risk capital, you're obligated to pay down the lenders. And then if the government is demanding more from you and taking, as price rises, maybe they want more. So then investors are really concerned about that while dealing with all the other issues.
What approaches have you seen on the continent that successfully align national objectives with private investment?
Yeah, so I think, again, partnerships have been key from what I have seen. Really coming to the table early amongst each other, really understanding each other. I mean, one of the things I heard this week, and it's really listening to understand rather than listening to answer. I think that was very powerful for me to unpack as we were having a panel discussion. And that's what I've seen over my 25 years in this sector, is really listening to each other. And I think Simandou is a great example where different stakeholders came in not knowing each other, yet getting it done, right? Because there was a common goal to get done. And the government came together with different partners. From our side, one of the things that I'll really like to mention is we try to find solutions in terms of, trying to bring risk capital, for example, equity, or concessional funding. Especially in the energy or the infrastructure space, where governments need support from the World Bank. So they also need support on technical assistance. And so this, in turn, helps investors get the confidence that the World Bank Group at an overall level is engaged with the government, and the government is trying to do the things in the right manner with the support that they need. So one of the things we've done in the past year is how to reach more projects and bring risk capital. So we invested with Appian Capital in their emerging markets fund, in order to be able to support, let's say, the mid-sized projects that we can then, maybe between the 300 to 500 million range, rather than only looking at larger projects, right? Because you can really add value even at those levels. Generating in the gold sector, you can generate much more revenues, bringing capital to smaller lithium or copper projects, for example. So really, those are the ways we see that investors get confident, is through partnerships.
You mentioned that you've been in this sector for 25 years.
Yes.
When you and I have a conversation in the next couple of years, and the conversation is around what you have now, what we've discussed, what would you like to have seen changed, or that will put a smile on your face and actually say, we've moved the needle, we actually are seeing some really big traction on the ground? What are you paying attention to?
Yeah, so I really do think mining is a responsibility. And, you know, a lot of people already have said that what you can't grow, you have to mine. And I really do believe that. So one of the key success factors for me would be when governments really own their national strategies and bring alignment, because mining, as I said, touches energy, infrastructure, water, communities, ESG. So a mines minister or a stakeholder cannot, or a private investor cannot just look at the mining code or their mine project. So I think the holistic approach is one key aspect that we have been promoting and supporting all through these years, and I hope that takes much more of a higher level success factor down the road. And I also think clearly that if we can ensure value addition, even bringing the first, maybe let's say, alumina refinery into the continent will be a great win. Pelletization for iron ore will be a great win. We're already doing copper cathode in DRC and others, which is beneficiated, so there is value. And I think from an ESG perspective, really starting from where I started on the shared prosperity, that we really see the youth, the communities really flourish so that they feel that mining really adds value to them and it's not just taking value away. So those are the kind of three things I would really like to see. And we've already seen in some specific projects, but I think we need to see it much more in a more broader and many more countries. And then let me not forget the clusters and the corridors, because if you can connect countries, you can connect the hearts of agribusiness, manufacturing. So those are the kind of things I would like to see.
Namrata, thank you so much for your time.
Thank you.
For more mining insights, you can go to miningindaba.com.